Stock of the day is NAB. It is planning to buy back shares worth $1.5 billion, despite posting a 13% drop in first half cash earnings. The bank pointed to high operating costs and competition for the drop. Australia's biggest business lender saw cash earnings for the 6 months to March come in at $3.55 billion, in line with consensus. NAB's net interest margin, which is a closely watched measure of profitability, fell to 1.72 from 1.77% a year earlier. Declared an interim dividend of 84 cents a share. So, interesting that it looks like last year's margin boost has been eroded by that competition we're seeing in the sector. Daniel, what are your thoughts? Well, NAB's group cash profit there down to $3.5 billion and 12.8% on the year prior, down 3% compared with the second half of 23. Return on equity down more than 13% from a year ago. What did you make of the result?
Yeah, the banking results are hard to digest, Andrew. They're 130 pages, so I'm not going to pretend like I've had an amazing read through at this point. But just from a headline level, what was obvious was that, like you mentioned, mortgages and personal banking continues to be very, very tough. Obviously, competition is rife, and we've actually preferred NAB. We've had NAB as a higher weight in our portfolios, our income portfolios, relative to the other big four, because we thought the environment for business banking was a lot more positive from a banking point of view than the mortgage market. So that was good to get a bit of positive confirmation on that. Certainly the results from their business banking segment were obviously a lot more attractive and appealing than what it was from the personal banking segment. But we're continuing to see not necessarily higher provisions and impairments, but we're seeing higher, obviously, percentage of people in arrears in the 30 and 90 days, and clear stress, particularly when I saw data in the credit card market as well. So I'm not very, very positive on the local economy. I think that higher interest rates eventually will wear through and cause some elevated stress levels, but we're not seeing that priced in from an impairments or a provisions point of view from the banks yet. So, I would say on the balance of things, if you're looking to outperform the market, I'd probably be reducing banking exposure heavily. But we have had a preference for NAB against its peers in our income portfolio, that's for sure.
So if you have the stock, you'd hold it?
Yeah, we're happy to hold, preferably for looking for that income. But if you're thinking about outperforming the market, Andrew, I wouldn't be holding this stock.
Fair enough. Okay, Kevin.
Yes, I agree with Daniel. I mean, NAB is not one of the shares that we've been looking at, and the main reason here is because their return on capital is very low, and the stability of earnings and sales growth is not very high for us. So that's what we like to see. And in fact, we haven't been looking at any of the major banks for quite a while now for all of those reasons. And I think NAB is probably better placed than others for the reasons Daniel outlines, in that it's got a greater part of its business in business banking rather than the more competitive these days mortgage market, which is probably good for NAB. But if you look at NAB compared to, say, Westpac and CBA, if you look at their return on equity, both of the other two have higher returns on equity, and their earnings per share growth is very similar in profile, in that they're not essentially going up. They sort of go up and down and stay stable. So that's the reasons we wouldn't sort of look at these banks very much at all.
Okay, so I'll take that as a no then.
Yes, you can take that as a no.
Yeah, fair enough.
I think all of the banks, you notice the CEOs in all of the banks have been saying recently about people who are in trouble, they say, get hold of us quickly. So that might be telling of the times, I don't know. But it's an interesting thing. And the NAB CEO is no different. He inserted a little statement there. Anyone in trouble, get hold of them quickly and come to some arrangement.
Yes, right. Of course, he's only newly installed too, so interesting times for him. Obviously more challenging than his predecessor. All right, let's get